Welcome back to One More Stock channel. Today, we are strapping in for a really deep dive into IonQ. That's ticker IonQ. They're really one of the main pioneers in the pure play quantum computing space.
Yeah, it's a fascinating company. It sits right at this intersection. Cutting edge physics meeting, well, the hard reality of public market expectations. We're drawing heavily today on the analysis from the One More Money blog, and our goal really is to help you get a handle on the risks and the potential rewards here. Is this a foundation for massive growth, or is the industry just too young, making it, well, maybe too risky?
That's the big question, isn't it? That tension. So we'll unpack their business model, which is pretty unique. We'll look at their tech advantage, this trapped ion thing they talk about.
Yeah.
Then the financials, which definitely show the cost of this race. And crucially, we need to zero in on those risks, the things you absolutely need to weigh as an investor.
Right. We need to connect the dots between the technical stuff, qubits, coherence, fidelity, and the actual business reality.
Hmm.
How do they make money? How do they get to recurring revenue?
Okay, let's get started. IonQ, founded back in 2015 by physicists Christopher Monroe and Young-Seng Kim. And the key thing, right off the bat, is their choice of architecture. They went with trapped ion.
Which is fundamentally different, yeah. Different from the superconducting path that, IBM, Google, many others took. And that choice really shapes everything they do, their whole strategy. Because IonQ is operating in a tough spot right now. Two big truths. Quantum hardware is incredibly expensive to build and develop.
Right, serious capital needed.
And second, the actual market for quantum advantage, where quantum genuinely beats classical computers for a real problem, it's still emerging. It's not quite here yet at scale.
So they need a way to survive and grow before that market fully arrives. The One More Money blog analysis points to three main pillars for their revenue right now. It's kind of a hybrid approach. First up is QJS quantum computing as a service.
Yeah, this is their main scaling play. Instead of selling the super expensive hardware directly, they make their quantum computers accessible through the big cloud platforms. Think AWS, Microsoft Azure, Google Cloud.
Okay, so that gives them reach.
Exactly, global reach, basically overnight. And it lets them monetize usage, selling quantum compute cycles, without building a massive sales force themselves.
Makes sense. What's pillar number two?
Government and research contracts. They're actively going after deals with U.S. government agencies, research labs, that sort of thing.
And that's not just revenue, right?
No, it's crucial validation too. Plus, it's often non-dilutive funding, which is always good when you're burning cash on R&D.
Okay. And the third pillar?
That's the long game. Enterprise partnerships. Working directly with companies in finance, pharma, logistics, developing specific applications. The hope is these partnerships evolve into licensing deals, services contracts, recurring revenue down the line.
So QCIs for reach, government for validation and funding, and enterprise for the future payoff.
It's a complex strategy, yeah, but probably necessary to bridge this gap from, pure science R&D to a sustainable commercial platform.
Right. Now let's talk about that technology, the trapped ion moat. What does the analysis say makes it different, potentially better, than the superconducting approach?
Okay, so IonQ really emphasizes the quality of their qubits. Trapped ions, they argue, offer higher stability and, critically, longer coherence times.
The coherence time. Remind us what that is.
It's basically the window of time you have to perform a calculation before the quantum state decoheres, before it kind of forgets what it's doing due to environmental noise. Longer coherence means you can run more complex calculations with fewer errors. It's about reliability.
And they make a big claim about fidelity too, right? Something like 99.99% for 2 qubit gates.
Yeah, that's a key metric they cite, high fidelity in their gate operations.
So for someone listening, why is that high fidelity potentially more important than just having, say, thousands of qubits?
Because for the really valuable applications like designing a new drug molecule or optimizing a massive logistics network, the quality of the calculation is paramount. You need the right answer, reliably. A noisy calculation, even with many qubits, might just give you junk. So high fidelity is seen as essential for reaching actual practical quantum advantage.
Okay, that makes sense. Quality over just raw numbers for certain problems. But
Yeah.
hang on. If trapped ion is so great, why the massive acquisition costs for Oxford Ionics, like over $1 billion? Doesn't that suggest scaling this up is proving really, really expensive, maybe harder than initially thought?
That's a critical point the analysis raises. It highlights the tension. While trapped ion might promise lower operational costs, like you don't need those huge, super cold refrigerators like superconducting qubits do.
Right, less cryogenics.
The development costs, and specifically the cost and challenge of scaling it up, is clearly immense. That Oxford Ionics price tag tells a story. And historically, trapped ion systems have actually been slower in terms of gate speed compared to superconducting ones. Scaling them, connecting lots of ions reliably, that's been a persistent challenge.
So the risk is,
Mm.
what if the market decides speed is more important? Or just getting more qubits faster, even if they're a bit noisier?
Exactly. That's the architecture risk. The market hasn't picked a winner yet. There's no guarantee trapped ion will be the dominant approach. If speed or just sheer qubit count becomes the main driver, IonQ's fidelity advantage might not be enough.
And they're up against giants, right?
Yeah.
IBM, Google, Microsoft, all pouring billions into their own approaches.
Huge competition, plus other focused startups like Rigetti, D-Wave. It's an incredibly competitive field. IonQ needs to keep innovating and hope their chosen path proves to be the right one for the key commercial applications. It's a big bet.
Okay, let's shift to the financials, the numbers. What did Q2 2025 look like based on the One More Money blog analysis?
All right, so for Q2 2025, revenue came in at US $20.7 million, which was actually pretty good. It beat their own guidance by about 15%.
Okay, so beating expectations on the top line. What about growth?
Strong growth, about 81.6% year over year. So, commercial interest seems to be picking up. Customers are paying.
Well, there's always a but with these companies, isn't there? The cost side.
Oh, yeah. The net loss for that quarter was substantial, around $177.5 million. And the adjusted EBITDA loss was about $36.5 million.
Whoa, okay. A nearly $180 million net loss in one quarter. How should we frame that for listeners?
It tells you this is very much a deep tech R&D play. They are investing heavily to try and win the future market. Profitability isn't the focus right now. Technological leadership and market positioning are. The key thing enabling this burn rate is their cash position. As of June 30th, 2025, they had around $656.8 million.
Okay, a decent cushion.
And then they did a subsequent equity raise, bringing in another US $1 billion. So they've significantly bolstered their runway. They needed to.
Right. And they've guided for the full year 2025 revenue to be between $82 million and $100 million. Given those numbers, tens of millions in revenue, massive losses, but also huge potential in beliefs. What does the analysis say about the current valuation? It's in the billions, right?
It is. And that's the crux of the investment case and the risk. IonQ is, without doubt, a speculative growth company. The multi-billion-dollar market cap isn't based on current performance, not even close. It's entirely pricing in the expectation of future dominance in that huge quantum computing market we talked about.
So a huge gap between today's reality and tomorrow's potential being priced in.
A vast gap. You're basically betting that this relatively small company can solve fundamental physics and engineering challenges, scale them commercially, and do it on a timeline that satisfies Wall Street investors. It's like walking a tightrope. The margin for error is incredibly slim. Any slip-up, any delay, and that valuation could come under serious pressure.
Which kind of explains why investors might take that risk, right?
Mm-hmm.
The potential upside is enormous if they pull it off. That addressable market. Some estimates are $80–100 billion by the mid-2030s, maybe even higher, targeting huge problems in drug discovery, materials, AI.
Absolutely. The potential reward is transformational. And IonQ has several strategic catalysts lined up, things the One More Money blog highlights, designed to capture that market. First, hitting their technology milestones. They have a public roadmap, a very ambitious one. They're targeting something like 800 logical qubits by 2027.
Logical qubits, those are the error-corrected ones, right?
Yeah.
The really useful ones.
Exactly. Getting to fault-tolerant logical qubits is the holy grail for the whole industry. Then they're aiming for 80,000 logical qubits by 2030. Hitting those milestones would be huge validation.
Okay, milestone delivery. What else?
There's strategic acquisitions. We mentioned Oxford Ionics, that billion-dollar deal, but also LightSync, Capella Space.
So buying up capabilities.
Yeah, it's about building a more complete offering. Hardware, software, specific application expertise. It's meant to accelerate their path to market and maybe build higher walls around their business, make it harder for competitors.
Got it. Number 3.
Government and defense tailwinds. Quantum is seen as critical for national security. IonQ's U.S. base, their government contracts, collaborations with allies like South Korea's KISTI or Japan's ACE that provides strategic backing and, again, that valuable non-dilutive funding.
And finally, Just getting more people using it via the cloud.
Right, the cloud adoption ramp.
Yeah.
The easier it is for researchers and businesses to access and experiment with IonQ systems via AWS, Azure, Google Cloud, the faster that usage can grow and hopefully convert into steady, paying enterprise customers. That's the inflection point they're aiming for.
Okay, so a clear growth strategy. But now we absolutely have to balance this with the risks. This is crucial for anyone considering an investment. What are the major headwinds?
Number one is pretty fundamental: revenue scaling and profitability. That $20 million quarterly revenue sounds okay now, but it's tiny compared to the valuation. Those losses are steep. They have to show a path to eventually making money, which means converting that tech lead into real, large-scale paying enterprise contracts.
And the risk that their core tech just isn't the winner.
Yes, that architecture risk we discussed. What if the industry pivots? What if superconducting qubits get good enough, faster? Or what if scaling trapped ions just proves too difficult or expensive for reliable error correction? That undermines their whole premise.
Then there's the challenge of actually making those acquisitions work, isn't there?
Huge challenge: integration risk. Spending over $1 billion on Oxford Ionics is one thing. Successfully merging the technology, the teams, the cultures without stumbling or slowing down your core roadmap, that's really, really hard. Big M&A deals often struggle. Execution has to be near perfect.
And we saw how sensitive the stock is. Valuation volatility?
Definitely. The analysis pointed out that Q2 miss on earnings per share, right? Revenue beat, but EPS was much worse than expected. $-2.17 versus 13-cent consensus. The stock reacted negatively. It shows how little room there is for disappointment when so much future growth is priced in. Any hiccup gets magnified.
Okay, what else?
Just the general market adoption uncertainty. Maybe practical quantum advantage takes longer to arrive than people hope. If commercialization timelines stretch out, investor patience will wear thin. That multi-billion-dollar valuation becomes much harder to justify if the payoff keeps getting pushed further into the future.
So putting it all together, what's the bottom line from the analysis for some listening?
The One More Money blog frames it pretty clearly. IonQ is a high-conviction bet for believers in their tech and the quantum future, but it's also an undeniably high-risk, deep tech play. This isn't for the faint of heart or for anyone needing quick returns.
Definitely a long-term hold if you do invest.
Absolutely. Think 5, maybe 10 years out.
Yeah.
And because the outcome could be quite binary, huge success, or becoming obsolete, it's probably best suited as a smaller speculative piece within a well-diversified portfolio. Don't bet the farm on it.
For those who are watching IonQ closely, what are the key things they should be tracking, the main metrics?
Okay, I'd watch 3 main going forward. First, revenue growth. Are they consistently hitting or beating their guidance, like that $80 to $100 million target for 2025? Second, progress on the tech roadmap, specifically those logical qubit milestones. Are they delivering on their promises? And third, look for signs of operating leverage. Are those big net losses starting to narrow, even slightly, as revenue grows? That would show the business model starting to scale.
All right. Let's leave our listeners with a final thought to chew on. If quantum computing really does take off in the next decade, maybe like GPUs did for AI or even like classical computers way back, if it hits that sudden steep capability curve, IonQ with its current position could be a massive winner.
But if the timeline stretches out much longer, or if a rival technology surprisingly leaps ahead, then that current valuation looks very precarious indeed. It's a fascinating story, but the outcome is definitely not guaranteed.
Please note that this analysis is based exclusively on the information available in the One More Money blog and is intended for informational and educational purposes only. This is not investment advice. Thank you so much for watching.
Yes, thank you. And if you're interested in U.S. stock investment and want more deep dives like this one, please do subscribe to the OneMoreStock channel. That way, you won't miss any future videos. And please do like this video and leave a comment. Let us know what you think about IonQ and the whole quantum space. We'd love to hear your thoughts.
We'll see you again in next stock analysis, etc. Goodbye.